Welcome to episode 4 of Opportunity Knocks. I can't believe we're already on episode 4, but this has been a lot of fun so far. I hope you're enjoying it. I'd love to hear your comments and feedback, even if it's bad. The only way I can get better is by hearing that. So, anyway, this is an interesting episode because I'm bringing on the one and only Ryan Paton. If you don't know Ryan, he's my brother, and he's got the biggest heart of anybody I know. He does a ton of volunteer work with Honor Flight, and he owns a company called Capital Lending. He's been a mortgage lender for, I think 20 years now, and he worked for my company back in the day, and he's really done a great job growing his business. And Ryan talks, it's a little different than the other podcasts we've done because Ryan talks about really his business and different ways that you could use your mortgage and being a homeowner and buying a second home and about really interesting stuff. Talks about rates, and it's different than our normal podcast where we hear about how they got started and then boom, there's the opportunity knocking. This is a little different. And the reason I did this one is because if you live in South Florida, actually Broward County, I'm probably not going to drive it outside of Broward, but if you're in South Florida and you wanted to do something like this, use the Sprinter, create content, have your own podcast, do that. I do that for you. So we have two options. You could either do it yourself or in our Sprinter and rent the Sprinter, or you could hire me to do it. And I come in and kind of produce the whole thing for you. So it's a service that we're going to offer, and you can find more at southfloridasprinter.com. And that's kind of what you see Ryan doing. Which what we do is we cut it up and we take clips that are, again, position him as the authority, then market those clips, optimize those so they rank. So that way, when somebody goes to Google and searches, boom, there's that video of Ryan in the Sprinter. He's the authority. So that's kind of how we do that. I'm going to walk you through a little bit more of it. As next week moves on and the week after, you'll see these short clips of Ryan. And you know what? When somebody wants to buy a second home, they remember that guy. And video is so important. And this is just an easy way for you to create video. So again, two ways to do it. You could either rent the Sprinter, the studio, and I drive it over to you on site. You come out and it's basically a studio on wheels. So you could do it half a day or full day is what we offer. And then you could produce it yourself and do it all on your own. Or you could just have us do it all for you, and we'll do something similar to this where we drive it in. And then we also make that part of our story, so you get extra exposure on that. But anyway, I hope you enjoy this podcast with Ryan. He's a rock star, and he has a lot of awesome things to say during this, so enjoy it.
I used my mortgage. That's a beautiful thing about a mortgage. You can let it use you, or you can use it.
Ryan, why don't you tell me a little bit about Capital Lending Group, how you got started, and your background?
Yeah, we thanks for having me again, TP. We actually started Capital Lending Group in 2007, which happens to be the worst mortgage market in the history of mortgages. I mean, it was the absolute worst time to be in the business, worst time to start a mortgage company. And, because I was doing mortgages since 1999, everything's going great. The market crashes, and two options, obviously. I could be done with mortgages, or I could just jump in to the worst possible time. And that's what I did. And it was tough. You know what I mean? I had to cash in my 401k, my IRA, and
stay lean
and start a company in a market that was just terrible. And it was a challenge. It was a really big challenge. And that's what makes the time right now, when things aren't good, it makes it easy for me to adjust, because nothing compares to 2006, 7, 8, 9. It was the worst 3 years in the mortgage industry. And right now it's a challenge, but we know what to do during times like this and kind of figured it out.
And speaking of that, you talked about being a challenge back then. How about the last 3 years? Yeah, we're going through a little tough time now, but this has been unbelievable what we've seen in South Florida as far as real estate and the market like that kind of recovered pretty well, right?
Oh, yeah. I mean, it was like, if you lost everything in 2006, 7, 8, 9, your values plummeted. Now it's better than it was before. So if anybody hung on to their properties from that crash, right now they're back above where they were. So that's what happens sometimes. Things they get bad, and then they always rebound. And historically, real estate doesn't go down, right? And right now, it's with COVID, really helped us out. Those rates we got during COVID really helped our housing market, and people want to move in South Florida. This is a premier place to live, and so many people moved here after after COVID hit.
So let's talk about opportunities now. So I own a home. I have a lot of equity in it. We just talked about how property values went through the roof. What options do I have? I mean, obviously, can I refinance? Might not make the most sense because I probably have a low rate, right? Most people have a low rate. Second homes, investment property. Let's talk about that. How do you leverage that equity to buy something?
Yeah, absolutely. I did it myself, and we bought a second home in the beautiful North Georgia Blue Ridge mountain area, and one of the best purchases we've ever made. And I used my mortgage. That's a beautiful thing about a mortgage. You can let it use you, or you can use it. And I'm using my mortgage. I know how to use my mortgage. I've been doing this for 23 years. We have so much equity in our homes right now where you're not going to refinance your mortgage unless you have a ton of credit card debt, because those rates are 23, 25%, as high as that. And, if you refinance in COVID and you have a 2.5, 2.8, whatever, 3%, you don't want to get rid of it. But on the other hand, if the money makes sense, if you're saving $800 a month by going from a 2 to a 6, you do it. You know what I mean? If the math adds up, you do it. And then again, everybody's going to refinance in a year or two, anybody that takes a mortgage out now. So that's the only reason why you would. Some people get a divorce, they have to refi. It's a challenge, but we still know how to get the best rate in this high interest rate market. But using your equity, you know what? If you could use your equity and second homes, you can put as little as 10% down on a second home, which is pretty good. There's second mortgages you can do with it to avoid mortgage insurance. But at 90% financing on a second home, pull that money out of your equity. There's your down payment. And people don't realize that you can rent out a second home as well. So if I'm not in Georgia and I want to rent my place out, I'm allowed to do that with a second home.
And then you said the down payment on a second home is 10%?
You can put as little as 10%. The more you put down, the better, the better the payment, the better the rate's going to be. But think about that. A second home is a dream for everybody, especially someone living in South Florida. You live in South Florida, it's 900 degrees here pretty much year round. If you can get a chance to live in the mountains and to wake up in it's cool summertime, it's always cool there. So, that was like a dream for us to do. And that's what we did. We used the mortgage, and we have a second home now. And if I wanted to rent it out, I can't rent it out 12 months out of the year. But as a second homeowner, Fannie Mae, Freddie Mac allow you to rent it out when you're not using it. You just have to be in control of it. You can't say, hey, property manager, take over everything. They can't tell you when you can and can't use your home. That's the caveat with it for the first 12 months.
Now, debt now is at an all-time high, and I think it's going to continue to go up, right? And I'm talking about credit card debt. If I have a ton of credit card debt, let's say $100,000 in credit card debt, I have all this equity in my house. Does rate really matter? In other words, if I'm at a 3.5% rate and I go to 5.5%, that sounds awful. Who would want to, But if I'm paying off all that $100,000 of debt and buying a second home, it could bring. So all this that we're talking about here is more consulting than anything, I think, right? Because anybody can do mortgage, anybody can write a mortgage to do this. But what you're talking about is on the consulting side. You must enjoy doing that, right? I mean, you've been doing this for so long. Sit down with the family, with maybe somebody unfortunately gets divorced. You sit down with the ex-wife or the husband, whoever it is, and you try to solve a problem for them, right?
Right.
How encouraging is that to do when you basically put them in a position where they're much better off before? And to do that, you mentioned Georgia, second home, Airbnb. Is that something that you get involved in, and how does that work? Because I know a lot of people wonder about, how do I make money with this Airbnb?
Yeah, I mean, for your first question was sitting down with a family. I look at it like it's my personal mortgage. Everyone, I look at it, what would I do in this situation? And you're right. If I wanted to take cash out, I could take an equity line, which is at prime rate's at 8.25, 8.5 right now. But if you want to take an equity line out, that's a way you can pull it out, which is good. That way you don't have to mess with your current really good interest rate. But sometimes it makes sense. If you're going to raise your interest rate on your first mortgage, if you pay off debt with it, that'll kind of fix the problem of you getting your debt is debt, right? Revolving credit card debt at 20-15% is the worst thing you can have. So
it never goes down.
You'll pay the minimum payments for 70 years. It's ridiculous. But with a mortgage, it's amortized over 30 years. It's fixed. It's low. I mean, fixed rates right now on FHA are 5.5, VAs at 5.5, and conventional is at 6.5. In October, it was at 8% on the national average, just under 8% on the national average. So it's gotten a lot better. It's getting better, but I'd much rather have, if you have $100,000 in credit card debt, if you're going to, you need the cash out and you're going to debt consolidate, you can almost make it so you're going to lower your payment with getting cash out, even if you raise your interest rate on your mortgage. So yeah, consulting is what we do and kind of look at the whole picture. And like I said, when I do this, I just feel like it's mine. How am I going to beat the bank? How am I going to get the best mortgage for this family?
And it sounds to me like you're using that home as a tool to get. Oh, now you mentioned second homes and this, but I want to hear about what you did to your backyard, this Casa Emma.
Yeah.
This is unbelievable. So correct me if I'm wrong, but when you bought your house, you knew this is a beautiful neighborhood. I love this house, but it doesn't have the backyard that I want so much, right? So how do I now leverage that? And you kind of went in with a plan, right? Talk about how you did that and what you did ultimately.
That's the beauty of using your mortgage, and not letting your mortgage use you. I bought a house. Inventory wasn't great when I bought, but I wanted a certain area. So the house I bought, I looked at it on Realtor.com every night for 3 months, and it stayed on the market. It had some unique characteristics to it, but it wasn't exactly what we wanted, right? So I bought a house I did not want. Strategically, I did this because it had the backyard that I can build what we built. We built a pool house with an ice cream bar for my 5-year-old daughter. And her friends get to go there, and the smiles you see on their faces is amazing. But then at nighttime, it turns into a great bar for the adults.
Explain how that works. So the sliders that you have, the barn door, right?
Yeah.
How does that work? It closes. Yeah. It's an ice cream bar.
Exactly.
It opens. It's adult beverages, right?
Exactly. So we don't want the kids to come in for the candy, for the ice cream, to see liquor anywhere. So liquor cabinets shut. You can't even see it. So it's a real ice cream bar for kids. And I'm sure we're going to have some pictures on it while we're talking. But that's like, I wanted a courtyard pool. You know what I mean? I wanted that California kind of backyard feel. And the way I strategically did it was I put less money down on my purchase because, people don't realize it was always like our parents saying 20% down, 20% down. That doesn't make sense. Okay. If you have the money and money's no object, buy cash. You know what I mean? Or put a lot of money down. You won't have a big mortgage payment. But mortgage insurance is the lowest I've ever seen.
Why is that?
It's just gotten so much better over the years. And you'd be surprised. Even 5% down sometimes. I see mortgage insurance at like $60 a month. And that's temporary. You're going to get rid of the PMI eventually.
And what is mortgage insurance? For anybody that's listening that doesn't understand, they know they need homeowners insurance and this, but mortgage insurance doesn't protect you at all, right?
So mortgage insurance is if you put less than 20% down, you pay mortgage insurance on the loan, right? It protects the bank. Okay. So it's just the cheapest I've seen it ever. And I've been doing this for 23 years. Cheapest I've ever seen it. And the rates, sometimes they give you better rates with less money down. Okay. So if I can do very cheap or no mortgage insurance, sometimes I'll break it up into 2 loans, do an 80% and a 10%, do 90% financing with no mortgage insurance. So that's exactly what I did. And I put myself in a position from the get-go. I said, okay, I don't want this house, but I can make it into what I want it to be. And
because you can't you're buying the location, right? This is the city, the area,
the schools, everything.
The house, I can always invest in. And all right, smart.
Yeah.
Now let's shift gear a little bit here and talk about, you mentioned Blue Ridge, the place we have out there, right? So obviously when you go to an area that you don't know, somebody bought a second home out there and they didn't know it. The beauty of Blue Ridge is these last few years, you've built a good network out there, right? You've joined the chamber, you've gotten involved. So talk about why you like Blue Ridge and specifically some of the companies. Let's hear about, who can help. So if somebody's buying in Blue Ridge, I know nothing about it. Why would I invest?
Yeah, I mean, for me, coming from a South Florida perspective, it was, I looked at Napa, I looked at Colorado, and I went to visit, and I said, there's no way I'm going to have a second home in any of these two places, even though they're amazing, they're beautiful, but it's just not realistic to be able to go there. Yeah. The travel's too much, too far away. So I narrowed it down to Tennessee, Georgia, North Carolina. And we went out and looked. A couple of us went here, a couple of us went there. And we found that ease of driving, I can leave early in the morning and have a cocktail on my deck at 3:00 in the afternoon by driving to North Georgia. Number one. And a flight there is just, it's a piece of cake flight. $70. Sometimes it's $26 to fly there. You rent a car, you're up there in an hour. So it's such an easy way to get up there. But number two was the affordability of it. The fact that it's not quite, an Asheville yet. It's not quite a Gatlinburg, and I don't think it'll ever be that. But restaurant-wise, winery-wise, in North Georgia, activities.
Time out.
Yeah.
Winery? I don't know.
Yeah.
Georgia wine?
Georgia wine.
I mean, I don't know about that, RP. That I think I have to fight you on. It's no Napa.
No Napa.
Yeah,
not even close to Napa.
Nice, the atmosphere is pretty cool. So like the Bear Claw, is it Bear Claw?
Bear Claw is good.
RP, talk a little bit about the, we played the member guest out there, right, at the golf course, Full ticoa. And we got matched up with Doug, who owns Escape to Blue Ridge. Right. So talk about how that ties into everything that we're doing.
Yeah. So it wasn't my plan to rent out our cabin, right? And as I'm golfing with Doug Miracle, who owns Escape to Blue Ridge, which is pretty much the premier cabin rental operation in Blue Ridge. And I got a chance to talk with him and a couple other people that also have second homes there that rent them out. And, obviously if I'm going to do it, I want to do it with the best company out there. And so I met with them and I kind of showed them what we're going to do, what we wanted to do. And now we're going to do some business together where I can send my clients from South Florida, from Tampa, Orlando, and South Florida. I can send them up there and have Escape to Blue Ridge with packages ready for them to say, like, okay, my goal is to do a long range mountain view cabin. That's what I want to buy as my second home. Well, now all you got to do is go to my coupon code, add Escape to Blue Ridge, and they're going to have those available for you. If you want a creek, if you want, what else we have? We can do course. On a golf course. So, and speaking of golf courses, we have one of the best mountain golf courses that I've ever played in Blue Ridge. It's Old Ticoa Farm, which we joined, and it's just been an incredible experience. And we played the member guests there. It was just the people there are incredible, and it's like it's a brand new clubhouse, and they just built it so nice, and it's such a pleasure. I'll be up there in a couple of days, and I just can't wait to get back to that club. The golf course is pristine. It's amazing. It is. Those greens are so fast. Oh, look, there's no other golf course I've played at where they come and deliver old fashions to you in the golf. I mean, I remember we're going. I was a member guest, so they don't do that all the time. But I remember sitting over and look over and said, "Wait a second, does he have old fashions in the golf cart, bringing them to us?" That was a cool experience. What about what Old Ticoa did for Honor Flight? And let's talk a little bit about Honor Flight and how that all happened in Georgia, because I know obviously South Florida is the hub that you're involved in. How did we end up in Georgia with Honor Flight? Right. So we have Honor Flight hubs in pretty much, not in every state, but like Wyoming would cover Idaho and Montana. They'd have one hub for like 4 or 3 states there. But so there's a hub in 3 hubs in Georgia. Savannah's got one, East Georgia's got one. And then Atlanta to Tennessee is a hub called Honor Flight Conyers. And I flew a veteran from Georgia out of Atlanta Airport to meet the King and Queen of Belgium and the Netherlands right before COVID happened. And we did that. And I just got such a good relationship. I called the Honor Flight Hub there. They're their chairman, and I said, hey, I'm flying this guy out. Let's get you guys there because we're going to have some news. Let's get some exposure for Honor Flight in Georgia, and they need the help. They really do. So
they don't have the volunteers, right?
They don't have the support. They don't have everything that we have in South Florida. So it's not that I don't want to help our veterans in South Florida. We are still helping our veterans in South Florida. But why not help them as well? And especially since we moved, but we have a house in North Georgia, and if you're going to enjoy it, you might as well help that community as well. And that's what we did with Old Ticoa, where I said, okay, this is what I want to do. We've done these wine events with Caymus, and I said I'd love to do one in North Georgia, and then give 100% of the profits to our Honor Flight hub that's in North Georgia. And it'll just all that money's allocated only to those North Georgia veterans, right? So we did the event. And it raised $40,000 for our veterans in North Georgia. And
wow. And that's from the members of Old Ticoa, right?
The members of Old Ticoa came out, and a lot of them are veterans. You've met a couple of them. But the management at Old Ticoa, Peter, his father's a Korean War veteran.
Yeah,
so
I met him.
So they said, look, we're in. What do we need to do? So I got with the team at Old Ticoa. We just kind of put this together, and look at the result. Now we gave them the most money they've ever gotten, ever, $40,000 in one shot. So it was a great event. And not only that, it's the exposure and the support we're getting. We have new sponsors. We have new people that want to be guardians. So the money's great, but the support goes a lot farther than that money does. So it was an incredible partnership.
Speaking of partnerships, I want to talk a little bit about how you made Caymus, that partnership happen, because this is incredible. And, basically just to let everybody understand what Ryan did is he reached out to Caymus, and obviously you love wine, right? You wrote a blind email, right, to the marketing manager of Caymus. And the email went something like this. Hey, I run South Florida Honor Flight. There's a lot of volunteers involved, and I'd love to get Caymus involved. We have World War II, and next thing you know, you get a phone call, and she says, the owner of Caymus wants to meet you, right? How did that happen? And is that from an email, right?
It was from an email, but it was, I started filming some of my World War II veterans that some of the stuff was so interesting and amazing. I said, I can't just sit here and not document it, not share it with people. So, and it was when I was drinking beers and drinking wine with these guys, because, World War II and beer, wine, and spirits have a really good connections, because, the countries that Americans liberated in World War II are the best wine, spirits,
Germany,
and best beer, wine, and spirits in the world, right? Italy, and then the American theater, California. Mm-hmm. You know what I mean? So, Japan, the sake. So there's a relationship between World War II and beer, wine, and spirits. And that's what I said to, Caymus. I said, look, I'm doing this I'm putting this together, and it's in some way, it's going to get people that don't care about veterans or don't care about history. They're going to want to learn about this because there's another angle I'm bringing them in. So that's what really got them. And, I went to the winery, I met with Chuck Wagner, and from that meeting, he said, whatever you need. He goes, I wouldn't have my winery without World War II veterans. So how can we do it? So I said, what if we brought some veterans to the winery? We'll get some California guys. I'll bring some Florida guys, because I was bringing a veteran to San Francisco. I was already going to be up there. He wanted to go to the pier. He left for Okinawa. He wanted to go there. So I said, hey, look, I'm going to be up here. I'm going to have some veterans. So I invited a lot more veterans, did some fundraising for it. And I was able to fly these guys to California and then get 6 or 7 Napa Valley.
And you flew them first class.
We did. And we got some Bay Area veterans as well. So we went there, we had the lunch, and at that lunch was probably the best lunch I've ever had. But at the lunch, Chuck Wagner said, how would you like to do a wine label dedication to World War II? And I said, that'd be incredible. Now, fast forward to now, he let me pick the veterans on it.
4 veterans, right?
I put 4 of them on there, and designed the label. And what we did was we did a QR code, which you helped me with it. We did a QR code on the back where you can actually learn about these guys, what they did before the war, what they did during the war, and what they did after the war. And I picked 3 American veterans and 1 British veteran, which is incredible because not many people know that British veterans protected our eastern coast from Nazi U-boats that were already here. So I put one on there to kind of, in honor of Jeffrey Palmer, one of those guys that served here. And a lot of them died and they're buried in North Carolina. So we talk about the Americans that went over there. We don't talk about the British sailors that came here and protected our coast. So, having those 4 guys, which are dear friends of mine, on there was pretty incredible. And the fact that when Chuck Wagner said we're going to do it, he said we're going to do it on my best bottle of wine, which is special selection, best wine they make. Which if you go to Total Wine, that wine without the label on it is $200 a bottle. Capital Grille, it's $500 a bottle. So
and he donated it.
He donated it, but I couldn't believe everything he was saying was better, and it all came to fruition.
And you got how many bottles out of it?
We did it, and he said, I'm going to allocate 500 bottles of this.
500 bottles of $200. This is the best juice you could get, right?
Yeah.
This podcast is called Opportunity Knocks, right? And basically what it is, the premise of it is opportunity is always knocking at the door. It's the people that take advantage of it. What you did is you wrote an email. Chuck said he's interested, and he said at the lunch, I want to help. That's the opportunity knocking, and you basically jumped all over it and said, let's get this done. The end result is you came up with 500 bottles that each one was selling for, I think we got, $2,000 for some bottles?
Well, the one went for $5,000.
$5,000 at an auction,
At an auction, right? Yeah.
So $5,000 for one of those, and that $5,000, let's just make it clear, that goes right to Honor Flight, and 100% of that money goes to the veterans. There's 0 salaries, right?
Yep.
I mean, this is powerful. So opportunity knocks. You took advantage of it. I give you a lot of credit for that, and that doesn't go unnoticed. Everybody realizes how much it's a lot of work you put in for that. So kudos to that. I know we're not talking about capital lending, but this is your passion, and that's important to bring it up and for people to, hey, get involved with Honor Flight. Even though the World War II and Korean veterans, there's not many left, but there's Vietnam. There's a lot of Vietnam vets that didn't get a very good welcome when they came home, and then there's Desert Storm. I mean, unfortunately, there's a lot of wars, that people served and died for our freedom, And I love how capital lending, yourself specifically, is so focused on giving back on that side of it. So great work on that. The last thing I want to talk about, we went back and forth a little bit with mortgages and this and that, but I've seen you in action. I've seen you when you're qualifying somebody for a mortgage and doing this. You got to tell me a little bit. I know you can't give all your secrets, but that when you're on that website and you're looking at rates and when they're adjusted, it looks like the stock market, like a lot of things. Talk about how you use this technology to lock a rate.
Yeah, it's incredible because we didn't have to do this before 2012. Rates weren't fluctuating as much as they do on a daily basis back in the day. It's like you can look at a rate sheet back in 2004 or 5, whatever, and go on vacation and look at the same rate sheet from a week ago and it's the same. Now rates are changing 4 to 5, 10 times a day sometimes. So you have to know when to float and when to lock, right? And I learned from the best. I learned from a guy that when the market was crashed, he happened to come down here. I went and saw him in Miami at a hotel, and he did a presentation, and I signed up with this group, and he kind of taught me a little bit. I had some one-on-one calls with him and questions that I needed to know about the economics of mortgages and the data behind it, because that's what really matters, is like what's happening behind mortgage rates.
You talk about like stock market, things like that, or I mean, just overall.
Well, a lot of people think that the Fed controls fixed mortgage rates, and they don't. They manipulate them. Okay. And that's why every time you hear the Fed speaking, that doesn't mean that your rate is going to change from what your rate's going to change from what they say, not what they do. So if they say something and investors are going to react to it, that is going to change mortgage rates. So we need to be on the dial for it and ready for it. So if I got a contract with somebody buying a home, you have one goal: lock on the best day of my contract period. It's not find the best bank. It's lock on the best day of my contract period. And if that means a week before closing or the day you get your contract. So if this was like back in, 3-4 months ago, you'd be locking pretty quick because rates kept getting worse. So you do the math on it. You get a 30-day contract and rates drop the entire time. You can get yourself in a pickle if you wait to the lock, So in that case, but look at the past 30 days. Rates got better every single day. So rates right now today are the best I've seen in 200 days.
Now, what if you lock early, but then you realize, wait, now obviously you look at it and you can kind of see, I expect them to go up or down. But like you just said, the last 30 days, what if you lock it early? Are you screwed out of that?
Yeah, you are. And that's the beauty about being with a mortgage broker as opposed to a direct lender or a bank. Okay. Because once you lock that loan, you're in it, right? You can't say, oh, give me the better rate 2 weeks later. It doesn't work like that. Once you lock, you're locked. Being a mortgage broker, I have more flexibility. I have one of my banks that does a float down renegotiation. And then at the end of the day, if I needed to switch to another bank, I could do that. So I have the flexibility of being a mortgage broker, by far the best way to get a mortgage, because if it wasn't, I'd be working at a bank or a direct lender or a credit union if that's the case. So I have the best way to get my clients the best mortgage. And like I said, it's all about lock strategy, and it's a real thing, and it could save you a lot of money.
And proof to that is you have a lot of referral sources that are banks, right?
Yeah.
That people that run banks that say, here, Ryan, we could do this, of course, but you're going to be better off. So that shows that it's much better going to a broker. This has been awesome. This has been great. Anything else you want to finish with? Obviously, you as a consultant is a huge value to anybody, and we'll put all your social media, links and everything on this. But anybody can call you, right? They can pick up the phone and just get you on a phone and call your office or shoot
Absolutely.
you an email, right?
Absolutely.
And you'll talk to anybody, and somebody has questions on, hey, what should I do? Here's the situation. You welcome those, right?
We do. And, like you said, we have banks that are sending us their clients. Other mortgage brokers from other states are sending us their clients because they know what we do. And now we're licensed in Georgia and Florida. And we're working on New York, probably licensed in New York next few months. But yeah, we're kind of laser focused on Florida and Georgia right now, and mainly second homes in Georgia. So, it's been going great. And if anybody needs us, obviously we're here. And it's, like I said, we look at the data, we know what we're doing, and we use these tools to put our clients in the best possible position to get the best mortgage. So
awesome. Love it. You're the best, RP. Thanks, my man.
Thanks, TP.